What is that time of the show where we like to turn our attention over to the grain and livestock markets? And joining the show this week was the president of Global Commodity Analytics. That is Mr. Mike Zuzolo. Mike joined us on Wednesday afternoon, and here's our conversation. Let's recap what you've been seeing in the corn, soybean, and wheat markets. Some momentum in particular for corn. What are you watching over the past 15 days or so, Mike?
Yeah, I'm glad you brought that up. We've gotten this movement in the corn to the upside because of the demand, because of some Argentine weather starting to come into play as far as drouthy issues in some of their key growing regions. But I think, Bryce, what we've seen now is probably hit some major resistance levels ahead of this upcoming Friday, January 10th report that we'll, be talking about after the weekend, and seeing exactly what the USDA gave us for final numbers. But I think by and large, the corn has tried to do yeoman's work and essentially go up by itself without the help of wheat, without the help of soybeans. And we're at a point now with the specifics, the wheat corn spread, the soft red wheat minus the corns trading at about 80 cents, premium to the soft red wheat. That is feed grade territory when it comes to the price of wheat over corn. So you get that low, you get below $1.20 wheat over corn. That tends to bring in, especially in Asia, some additional wheat feeding at the expense of corn. So I think we're at a point now where maybe the corn's going to have a little bit more difficulty going it alone. It's going to probably need either the wheat or the meal or both. And certainly that's, I think, my mindset, especially given the fact we're getting the countdown with the new Trump administration and more certainty about whether these tariffs are going to happen or not in the next 30 to 60 days.
For soybeans, Mike, we're kind of hovering right around that $10 mark for the deer buys and a little bit of the deferreds. What's been the momentum or keeping us kind of a lid on the beans as you see it?
Momentum is fear right now, I think, Bryce. We've taken some premium out of the soybeans because the crop is not bad in Brazil. We've got issues in southern Brazil that need to be monitored, but it's really about Argentina with South America right now. And Argentina equals meal and it equals corn, if you ask me. So those are the price leaders to the upside if we stay drouthy through the rest of January. Soybeans, I think, are going to continue to be a follower. There's one caveat, and I think this is where the January 10th crop report really matters, especially given that China has bought so much ahead in the first part of 2024 and into the later part of 2024 even, and that's going to be the U.S. yield. What does USDA give us for the U.S. final yield for soybeans? Is it going to remain at 51.7 bushels? Or can we go back down towards 50 or even maybe below? I've still got a lot of clients suggesting to me this month that they did not get those record yields. It was not nearly as good of a bean crop as they finished their harvest. So that's going to be one of the key determinants, I think, as to whether the bean yield trend, I should say, is going to be factored in as far as a low in the beans with the lower U.S. yield, or whether we start to leak more in terms of price, because we are seeing right now this week Mato Grosso starting to harvest soybeans.
You are alluding to the reports coming out on Friday. Is the soybean yield going to be the most important thing you're watching?
Yeah, I think it will be, but I think the trade's been very keyed in on the demand side of the equation globally, and we're picking up in the feed grains, wheat and corn, and to a lesser degree, some of the other minor grains, sorghum. We're getting some more demand in the world side of the equation, and that's been kind of a surprise the last couple months. We'll see.
Story in wheat.
I think the big story in the wheat is continue to be the currencies and the tariffs and the trade. We continue to see the Russian ruble weaken against the U.S. dollar. That keeps the market talking about cheap Russian supplies. But I think this is where maybe that dog won't hunt as well as it has in the past here as we go forward.
All right. You had a note you wanted to talk about cattle. A lot of people want to talk about cattle right now because we're looking at record prices. That makes some cattle producers happy out there. What are your 2 cents of the cattle complex?
My 2 cents is it's a very clean market in that the weather and the cash market has been driving this trade. I'm a little bit more nervous as we get into 2025, though, Bryce, that we're going to see more of a mixed bag of price action. I think we're demand rationing right now at these price levels, but because we have tight supplies of alternative proteins, it's not hurting the retail sector yet in the beef trade domestically. I think we are hurting the import export market with this strong dollar. So I'm just kind of signaling out there we could keep a very strong winter weather pattern in the plain states and keep the prices strong through the cash market. But don't be surprised by some pretty significant corrections. We did that in 2014. We did it in 2015. I don't see this year being much different.
All right, just a few seconds left here, Mike. We've talked about the demand picture, South American weather, and those reports due out on Friday. What else should be monitored by our producers watching today?
The big thing for me, Bryce, continues to be whether we come in with a demand low in this market and can kind of clean up, not having to deal with the weather and the supply like we've had to deal with the last year and a half for upside movement in prices. I think that really starts with China. From what I can see right now, China is not healing up. They're still deflationary, and the financial markets, I think, are getting more and more nervous about that. So that really needs to be watched very carefully and closely.